going to make 2008 look like a Sunday school picnic. Take your money out of the bank. Don't leave it there. You're going to lose it one way or the other. They don't care about the country. They care about themselves. Stocks are so extremely overpriced right now. They have to collapse. Any day you go to sleep, you could wake up and it could be a whole new world. We screwed the world over in 1971. We defaulted on our commitment. We promised to pay gold, and then we told our creditors we're paying nothing. We basically just said these checks are no good. We made a commitment and we're defaulting on it. Now, the dollar went down a lot during the 1970s. It lost about 2/3 of its value relative to other fiat currencies like the Deutschmark
People
or the
didn't
Swiss franc.
de-dollarize then. When the US broke the relationship to gold, why didn't a currency rise at that moment that was tied to gold?
There really weren't many currencies left that were still tied to gold because they were tied to the dollar, and then the dollar detethered, from gold. But what happened was the dollar lost a lot of value during the 70s, right? The Swiss franc went from 25 cents to 75 cents. The yen, it went from 360 yen to the dollar to maybe about 150. I think the Deutschmark, we used to get 4 marks to the dollar. Then it went down to like 1.5. The dollar got marked down. Oil went from $3 a barrel to $30 a barrel in the 70s. Gold went from 35 to 800, right? So the dollar lost a lot of value. And that meant every American got poorer in the 1970s. That's the main reason that so many women started working in the 1970s. During the 1960s, if you were a married woman, most of you didn't have a job. Your husband could support you. It didn't even matter what kind of job, blue collar job. He supported his wife. But inflation was so high and people's money lost so much value that in order to pay the bills, the wife had to get a job. It wasn't like, women felt liberated, so they decided to work. They were liberated when they didn't have to work. They were forced to work because their husbands couldn't support them anymore because of the inflation. But the dollar did stabilize in the 80s, with the very high interest rates under Volcker. Rates went to 20%, and Reagan came in and, we kind of like saved the dollar, got a reprieve. But now I think the de-dollaration is going to be complete because the other thing that happened to support the dollar was the petrodollar. So what happened is we went off the gold standard. So there was no longer any gold. We made a deal with Saudi Arabia to price oil in dollars. Say, hey, we'll defend you. We'll defend your regime. We'll keep your enemies at bay. You just price your oil in our currency. So now all of a sudden we did create a use for the dollar because if you wanted oil, which everybody wanted, you needed dollars to pay for it. So that also really helped support the dollar. But the petrodollar now, unless you're blind, is on its way out. A lot of these countries are trying to figure out how to bilaterally deal oil in currencies other than the US dollar. When the world moves away from the dollar totally, then the collapse is going to continue. It started in 1970. It's going to continue. We're going to see a huge erosion of purchasing power, but it's going to be even worse. The economy today, the US economy, is in much worse shape than it was in 1970. I mean, we were a creditor nation in 1970. Even in 1980, we were still a creditor nation. That meant the world owed us a lot more than we owe the world. Today, not only are we the biggest debtor nation, we owe more money than all the other debtor nations in the world combined. Back even in the mid-1980s, America still had trade surpluses. Our factories were productive enough that we exported more than we imported. Now we have the biggest trade deficits in the world, biggest trade deficits ever. So the economy is a shadow of what it was.
Why does debt matter? What's the problem?
If you get into trouble, do you want to have, a nest egg to fall back on? We save for a rainy day, right? You don't borrow for a rainy day. Why do you build up a rainy day fund? So you have something to fall back on if times are tough. But if you're broke, if you have nothing, what are you going to do? We are vulnerable. We're no longer self-reliant the way we used to be. I mean, the economy is all screwed up. And I think that the decade ahead is going to be a lot more challenging than was the 1970s. It's going to be a much bigger adjustment. Now, obviously, women can't start working. They're already working. So it's not like we have a spare laborer that can pick up the slack like we had back then. We have more technology now. That's a positive. And now the whole specter of AI, that could help out. I mean, that could help increase productivity there. I just don't think it's a get out of jail free card, that it's going to be like a miracle thing. But I think it's going to help. And a lot of other technologies that we have will help. But the problem is government, because I'm afraid that instead of getting out of the way, which is what you need, right? We're in a mess. Capitalism is our only way out. The free market. We can work our way out of this hole, right, that the government put us in. But if the government reacts to this problem with even more government, more regulation, more spending, there's no way out. We're just going to be impoverished until there's a violent revolution. Who knows when that's going to be?
Can you imagine any scenario where government actually gets smaller?
Yes, only in a scenario where things get better, because it's actually inversely proportionate. Prosperity is inversely proportionate to the size of government. The smaller the government, the more prosperous the society. And the bigger the government, the less prosperous. You compare. You have countries where they split it. East Germany, West Germany, South Korea, North Korea. right? Look at these countries where you take the exact same society and just cut it in half, and you have one that's socialist and one that's more capitalist. Which one has a higher standard of living? Which one does better? Who did better, communist China or Taiwan or Hong Kong? China didn't start doing well until they started adopting free market capitalism. If you go back to the 1970s and say, hey, where was it better, in mainland China or Taiwan? Taiwan. Yes. It was better in Hong Kong. Why? Because mainland China was run by the communists. It wasn't until really the 1990s that the communists realized that communism doesn't work. They didn't come out and tell the people it didn't work, because you still have the Communist Party, but they started changing the nature of the economy to allow entrepreneurship, to allow private ownership of the means of production. That's what made China what it is today. It was as capitalism came into. I'm not defending communism. All I'm saying is that as China became more capitalistic, their standard of living went up. Before they did that, there was a lot more capitalism in Taiwan or in Hong Kong. You had the same basic, Chinese people there, but they did much better. Their living standards were much higher. Until we have a lot of pain and suffering, nothing's going to change. And as long as the government can bail everybody out by printing money, they're going to do it. If I'm right, and I'm convinced that I am, and we have massive inflation that hopefully doesn't become hyperinflation, but it could, things are going to be so bad that people may finally have enough of a belly full of government that they just puke it all out, and that a message of economic freedom actually works. Some people like me and other people, and we have the internet and we have a way of communicating to let people know, hey, the government did this. The government is not part of the solution. The government is the problem, right? That's what Ronald Reagan used to say, right? The government isn't the solution. The government is the problem.
You have already done the inflation. The person has been shot, they are bleeding out, but somehow they don't recognize yet that they have been shot. So inflation is coming for you. As the Fed tries to manage that inflation by raising rates, they're probably going to chicken out. They're going to try to cut or something. But the second they try to cut, inflation is going to rear its ugly head again. Then as inflation starts happening and they realize that they're no longer going to be able to cut rates, you're going to start raising rates. As they raise the rates to try to tamp that back down, then treasuries are going to take off, bonds are going to tank. We're going to see interest rates going up. People are going to leave the stock market because it's going to be very hard for you to get that kind of yield that you can get in a treasury bill, which is nice and safe. Just park my money with the government. It's yielding copious amounts of money. And when that happens, they're also going to flee regional banking. Now, this is where the scary part starts. As they flee regional banks, which are insolvent, as far as I can tell, regional banks then are going to be they're going to start collapsing. The government's going to step in. They're going to print the shit out of money. They're going to inflate it again. And as they inflate the money supply, they're going to have to raise rates again, which is going to pull people out of regional banks even faster. It's going to pull people out of the stock market. So everything consolidates into like 4 way too big to fail banks. The stock market struggles for God knows how long. And now everybody's putting their money into T-bills, but that's the government that you're now betting on. And if you're right and de-dollarization is happening like crazy, the BRICS nations are creating a new currency, or threatening to, that's backed by gold. And so now your own thesis comes back to haunt us as Americans. And people are like, holy shit, you're inflating this thing to deal with the regional banking collapse. And now we've got, oh, hey, this other sexy thing over here, which is backed by gold. I think people also are going to flee into Bitcoin. They're going to flee to things that they see as backed by something, quote unquote, real. We'll stick with gold for now, not to get into an argument. And that's how the collapse happens. And no one wants that to not happen more than me, but that's one flavor of how that could play out.
There's a lot there. But first of all, I think you probably have a better understanding of the problem than a lot of people who have Nobel Prizes in economics. So don't, sell yourself short, because you have common sense, which a lot of professional economists don't have. But also, unfortunately, we actually need a collapse. So it's not like we should say, you don't want one. It's like, we don't want it to be as bad as it's going to be. But it's like, in California, those tremors are a good thing, because having tremors means you don't have the big one. There are imbalances that we need to have. Like, you need forest fires. If you don't have some, then eventually you have a really big one, right? So we have problems in the economy. They have to be unwound. The sooner the better. We're going to have to go through some pain if we want gain. I mean, it's inevitable. But let me go back to the beginning of what you're talking about. So first of all, yeah, the Fed has been raising rates in an effort supposedly to fight inflation, but it doesn't work. The only way that higher rates impact prices and inflation is if they encourage people to save more and spend less. That's the whole purpose. The prices are going up because we're buying stuff. And so the Fed is supposed to raise rates to discourage us from spending and causing us to save more. So now the savings, we can have, more production. But that hasn't happened. Even though the Fed has raised rates, the savings rate has collapsed. And credit card debt is at a record high. Government debts are at a record high. So the Fed's rate hikes have done nothing to impact savings and spending. So they've done nothing to bring down inflation. What they have done is increase costs, because when prices do go up, when interest rates go up, everybody who has debt, including all businesses who have debt, now have to pay higher interest on that debt. That's the same thing as paying higher wages to your workers, higher rent to your landlord. It's another cost that ultimately gets factored in. The Fed was artificially suppressing those costs for years and years, and so businesses were able to pass that on to their customers. But now that interest rates are normalizing, they have to raise prices to make up. So it's actually been adding to inflation. The reason that we've had to come down in inflation because of the rate hikes is the rate hikes caused the dollar to go up. Because as the Fed started hiking rates, currency traders bid up the dollar, and they expected rates to keep going up. The dollar had a big rally, and that brought down oil prices. Oil prices went way down. Other commodity prices went down because the dollar went up. That's what temporarily brought down the CPI. That is all changing. That's stopping. The dollar has topped out and it's headed lower. Commodity prices have bottomed out. They're headed higher. So we're going to lose that benefit. We're going to start to see prices rising again. And the rate hikes have done nothing, because the only way we're going to get to the root cause of inflation is if we cut government spending dramatically. And that's not happening. Government spending is going up. The Fed is going to go back to quantitative easing. They've already showed their hand with these last bank bailouts. And by the way, years and years ago, exactly what happened to these regional banks is exactly what I predicted would happen. Exactly like I got the 2008 financial crisis. I nailed this on the head. I said for years, as the Fed held interest rates low, this was a ticking time bomb for the banks. Because I said the banks are going to be stuck with all this low yielding debt. And when interest rates eventually rise, they're going to go broke. You had all these other analysts that were saying, oh, buy the financials because interest rates are going to go up and that's going to help the financials. I was like a lone voice saying, no, higher interest rates are going to be the death knell for these financials. Look, people were talking about mortgages, right? Hey, everybody is refinancing their mortgages. Everybody's getting a 3%, 3.5% mortgage. Isn't that great? Because, the homeowners can pay these low mortgages for the next 30 years. I was the only person out there in the financial community saying, wait a minute. What about the lenders? What about the banks who are going to be stuck with the paper? They're clipping these coupons for 30 years. What happens when interest rates go to 5%, 6%, 7%, and they've already loaned out all their money at 3%? They're all insolvent, which is what they are. Why do you think your bank? Go to your bank, Bank of America, Wells Fargo, see what their deposit rates are. See where their CDs are. They're paying nothing. They can't afford to pay you any money because they've already loaned it all out. It's stuck. They're all insolvent. They're all going to collapse. What's going to happen is the Fed's going to end up bailing them out with inflation. So you're not going to lose your money, but your money is going to lose its value. All this is going to happen. And the situation that you described, the piper's going to have to be paid here. But the best thing you could do, if you want to try to save yourself financially, but also maybe have a positive impact on the rest of the world, don't go broke. Don't go down with this ship. Get off the ship, get in a lifeboat, so that when everybody else is drowning, you can reach in and pull them out. Preserve your own wealth. And the way you do that is take your money out of the bank. Don't leave it there. You're going to lose it one way or the other. Do something with it. You could buy gold. You can invest it productively outside the U.S. You could buy quality stocks that pay good dividends that will rise with the falling dollar, that will also go up with inflation because the businesses are selling things where they have pricing power. In an inflationary period, you want to be in a business where you're selling stuff that people have to buy, not the stuff that they stop buying because they can't afford the stuff they have to buy. So there are certain types of companies that you want to own, and we own those companies and they're paying good dividends. And that's the first thing. We can't do anything to stop this. I was powerless to stop the 2008 financial crisis, but I could try to figure out how to profit from it. I can't do anything about this. I've tried my best to warn people. I've been out there. I've testified before Congress twice. I wish I could have gone there more often. But nothing I say matters to these guys because, again, they don't care about the country. They care about themselves. They care about getting reelected. Everything that they would have to do that was right for the country jeopardizes their reelection. The only way they can stay in office is to do what's wrong for the country. That's their paramount concern, is perpetuating their political careers, not helping the country. So all you can do is save yourself at this point. There's not enough of us who are going to figure this out to have any influence on the next election, but we can protect ourselves. There were people that made money in the 1970s with all that inflation. Most people lost a ton of money during that decade, but a few people who read the writing on the wall were positioned properly and they cleaned up in the 1970s. I think the same thing is going to happen in this decade. I think I'm extremely well positioned, and I think everybody who's been following my advice, sure, I've been giving this advice out for a while, so I've been early, but I know that I'm right. And the fact that we've kicked the can down the road for as long as we have simply means that it's that much more important to be positioned this way because the bubble has gotten much bigger. So yes, I had to wait a little bit longer to get paid, but I think it's a bigger payday because the problems that I was worried about a decade ago, none of them have been solved. They're all much worse. And so now the fallout is going to be much greater. And so the losses for the people who don't anticipate this and position themselves properly, those losses are going to be greater. And yes, people need to own gold. People should take advantage of that and buy gold. It's still about $1,900 an ounce. That may seem like a high price, but I think it's actually very low relative to where it's going to be. And again, it's not gold going up. Gold pretty much stays the same. It's the dollar that's going down. You're going to need more and more dollars to buy that ounce of gold. And so if you want to preserve your purchasing power, you convert your dollars into gold now. And then when you need to buy something in 5 or 10 or 20 years, you'll be able to afford it. If you just keep your money in cash, you may not be.
This stuff is terrifying, and I really wish that I didn't have to think about this. To that point, Michael Burry, who predicted the housing crisis along with you, he's one of the rare voices that was like, hey, this bad thing is coming. He just bet, essentially, is a way to look at it, $1.6 billion. I'll call it against the stock market. Have you looked closely enough at that to know what is he really trying to say with that bet?
He may make a lot of money, and it's all leverage. So he didn't basically put up 1.6 billion. He put up a much smaller amount, and he's willing to lose it if he's wrong, right? But he's probably controlling with leverage or options or whatever. I haven't looked at the way he's constructed that position. I know I thought myself a few weeks ago, I mean, even near the highs, about maybe I should, get short the stock market. I've been short the bond market, not in a big way like that. But if the Fed did the right thing, and if they do the right thing, he's going to clean up on that position if the Fed does the right thing. The problem is the Fed might cave and do the wrong thing, in which case he'll lose. But I don't know what the rest of his bets are, because given where interest rates are and where they have to go, and given what's going to happen to corporate earnings, stocks are so extremely overpriced right now. They have to collapse. The only way they won't is if the dollar goes down instead. If the Fed is willing to sacrifice the dollar to save the stock market and to bail out the US government, then they might do that, right? The Fed may decide to change its rhetoric. Okay, we're done hiking rates, or they might cut rates or go back to QE in an official way, and the market's going to rally if that happens, But in real terms, the market's not going to rally because the dollar, I think, will lose more value than the stock market gains. When you're buying puts or you're doing some of these shorts, it's nominal. That's what matters. So if gold goes from 1,900 to 3,000 and the stock market, goes up 10%, in real terms, the stock market got killed. But you're going to lose on your short, right? Because it's all about the nominal price when it comes to a short, not the real price. So for my money, I know that no matter what, the Fed's going to eventually do the wrong thing. But even if they do the right thing, in the environment where they do the right thing, the price of gold's still going to go up. I just don't really see any scenario where it goes down. And I don't really see any scenario where the dollar goes up. I mean, it could go up in the short run, but in the long run, it has to go down. I mean, there's no way this thing is going to shake out where the dollar has more value and not less value. I mean, you could make money short, but you could end up losing money in the long run, depending on what happens with inflation. But I think that for most people, being long the underpriced assets that will benefit from these events as they play out is probably a better way to play it than to just make a short-term speculative bet on the direction of the stock market, where you could end up being wrong and losing everything. It's very hard to get the timing right. I think the market looks weak. I mean, if I had to place a bet on where I thought the market was going to go, I would bet it's going lower. So Barry's made that bet. We're still very close to the highs. There's a lot of air to come out of this, especially in the NASDAQ, especially in a lot of these tech stocks that have had really big rallies. But again, it's hard to know what the government's going to do and when they're going to do it to try to, put a Band-Aid on this, because they could change policy. The Fed could just reverse. If they start to see the markets really coming under pressure, if they see some blowups in the banks again, money markets, because, this commercial real estate problem, which I also warned about years and years ago, is playing out the way I warned. I mean, commercial real estate prices are already down in many parts of the nation by 50% or more. I knew that interest rates would eventually go up because real estate prices are a function of interest rates, especially income-producing commercial property. They kind of trade like a bond. When interest rates are really low, it affects the cap rates on commercial real estate. So people were willing to overpay for real estate in an environment of 0% interest rates. I knew eventually rates would go up and then commercial prices would have to go down, just like I knew bonds would come down. And so that's going to put problems. And I also could see what was happening with the internet and more people buying online. And so there wasn't as much need for all this retail space. People weren't, going to the stores. They were just clicking a mouse or on their smartphone. But with COVID, it accelerated it. Yeah, I didn't see that aspect coming of it. I already knew that it was going to be bad. Just COVID made it that much worse. It just took a bad situation and made it an even more horrific situation. But as real estate owners are losing a lot of money on their commercial real estate, a lot of those losses are with the lenders. Because if the real estate is not worth the loan, then the owner just walks away and the bank is stuck with the collateral that isn't worth what they loaned. And now they have huge losses that they have to deal with on their books. And with all this supply on the market, in fact, I was particularly warning about what was going on with WeWork. Back in the day when WeWork was like buying up all this office space and committing itself to long-term leases and then renting out short-term. I was predicting the demise of WeWork long before it demised. It collapsed, but I also was saying that how it's going to impact the property market when all their property comes up for lease or comes up for sale. This commercial real estate problem is a banking problem. And the banking problem means it's an inflation problem, because how do you bail out the banks? You have to print more money. The residential market is also completely dysfunctional disaster. What's happening in residential markets? And I predicted this years ago. If you listen to my podcast, I talked about all this stuff years ago. It wasn't like I'm reacting to it after it happens. I warned about it years before it happened. So I predicted that a big problem in the real estate market, apart from all these banks that were going to be underwater, that were stuck with these loans. But I said that Americans who have mortgages are going to be stuck in their home because they're not going to be able to sell because the mortgage isn't assumable. So let's say I have a 3.5% mortgage, and now mortgage rates are 7.5%, 8%, and they're headed higher. I can't move. I can't sell my house because then I'd have to take on a new mortgage. Most Americans, if you're a homeowner, your most valuable asset is your mortgage, because you have the right to keep paying that mortgage for the next 20, 25 years, 30, however many years you got. The bank is losing a fortune on that mortgage. You're making a fortune. So people are going to stay in homes. Even if they'd rather have a bigger home or a different home, they're stuck where they are. Now, maybe they could rent it out, and keep the mortgage, but a lot of the housing stock is off the market now, because nobody is going to get rid of it because that's tied to their mortgage. And in many cases, rents are rising so fast that paying your mortgage is cheaper than paying rent. If you've got one of these, the low was 2 5/8, I think. There are people that got mortgages below 3%, during like COVID days. So those people are never selling. They're there, right? They die, their kids will keep the place. They have to keep that mortgage. So you don't have this housing stock. Meanwhile, landlords know that those houses aren't coming up for sale. They got a captive audience. Their tenants can't afford to buy anymore because the rates are so high. So they can jack up the rent. Eventually, home prices have to collapse. What's keeping that from happening is an absence of supply. But at some point, people are going to die. People get divorced. There's going to be circumstances, people lose their jobs. And even though they have a low mortgage, they can't even afford to pay that, right? So there's going to be housing that's going to come on the market. And then the price is going to implode because nobody can afford to buy the houses at these high mortgage rates. The reason real estate prices went up so much is because the mortgage rates went down so much, because people didn't buy price. They bought the monthly payment. That's what was the deciding factor on what they can pay. And the monthly payment was determined by the rates. Now, also the absence of a down payment. So down payments went from 20% down to 0. They've come back up a little bit. I think the average down payment now is more like 5 or 6%, but that's like nothing because it costs 5% to sell your house. You got to pay the real estate agent the commission. But the absence of lending standards, and a lot of that was because of government guarantees and Fannie and Freddie and all this stuff. People were encouraged to overpay for homes that they really shouldn't have bought. And I think it's important that people put up a down payment when they buy a home. They need to have some skin in the game. They need to demonstrate the ability to save money, because as a homeowner, I know that real estate is very expensive. You own a house, things go wrong. They're like money pits. They cost a lot of money. If you're a renter, that's your landlord's problem. You just pay your set rent. You don't have to worry about any unanticipated major expenses. Americans don't have money for unanticipated major expenses. So the banks did a good job when they required 20% down, to making sure that people didn't buy houses unless they were responsible enough to take on the liability. But the government incentivized everybody to buy houses and overpay, and you get tax breaks and government guarantees. And so the government caused people to buy houses that shouldn't have bought them. But the point I'm making now is that eventually real estate prices are going to fall. They have to if rates stay up. And now there's defaults. And now the banks are going to lose money on their residential real estate loans in addition to their commercial. And I think you're going to see a wave of defaults in credit card debt. Right now, yes, credit card debt is at a record high. Interest rates on credit card debt are at a record high. It's over 20%. If you've got a balance on your credit card and you're paying over 20% interest and you have record balance, there's going to be waves of defaults in credit card debt. In fact, I think what people are doing now who have credit card debt, before they default, they're just running up as much debt as they can. Because if you know that you're going to default and go bankrupt, you might as well go out with a bang, right? The more money you can borrow while you can, the better. buy as much stuff as you can on credit, and then default. So I think we're going to see a wave of default in credit cards. And what does that mean? That means the banks are going to lose because they're not going to get that money back. They're going to have to write off all those losses. So it's just more money printing. I mean, this financial crisis that we're headed for is worse than the one we had in 2008. It's going to make 2008 look like a Sunday school picnic, which is why I think we're going to have a dollar crisis instead. The Fed is not going to sit back and let all this happen. They're going to think they can make it all go away with massive quantitative easing, more money printed, because, hey, it worked before. It worked in 2001. It worked in 2008. It worked during COVID, so we'll just do it again. Well, you know what? It's not going to work this time. It's like you can only take so much of a drug until you die of an overdose. And every time we did more of this monetary heroin, we had to up the dosage because we kept upping the problem. But it's so big right now that if the Fed tries to drug us up again, the amount of monetary heroin that would be required would kill us. And that's kill the dollar. And everything's going to come toppling down. Think about this. So we have a $32.7 trillion national debt, which is rising by trillions of dollars a year. As of today, interest on the national debt is now the third biggest line item in the budget. So number one is Medicare, then Social Security, then interest on the debt, then national defense. We're actually spending more to pay interest on the money we borrowed than we're spending on defense. And of course, I think we're spending too much on defense. I think we should spend less, but we're spending more on interest. But here is the real problem. That number keeps growing. A couple of years ago, interest on the national debt was $300 billion a year. Now it's over $1 trillion. By the end of the year, it'll be $2 trillion.
What?
In 3 or 4 years, the US government will be paying more in interest on the national debt than it collects in taxes. So, I mean, this is impossible because the only way around that is that the Fed slashes interest rates. But what if they can't? What if they have to keep rates where they are? The government must default. There is no way that it can afford to make these payments because the Fed would have to print so much money to monetize that debt that it would create so much inflation that it would push interest rates even higher. The more inflation there is, the less private sector demand there is for government debt. But the more money the Fed prints to prevent interest rates from rising, the more inflation they create and the less attractive the government debt becomes. And now the Fed is the only buyer of treasuries. But now it's not just treasuries. What about municipal debt? What about all these municipalities and states that loaded up on debt? What's going to happen when it matures and they have to roll it over at much higher rates? What about all these corporations that borrowed a bunch of money to buy back their own stock? What's going to happen when that debt matures and now they have to try to refinance it and the rates have tripled or quadrupled for them? Everybody is going to collapse. Look, the problem is we need higher interest rates. Higher interest rates is part of the cure, but it's also what's going to kill the current economy. You can't get rates from where they are now to where they need to be without a collapse. It's like you can't make an omelet without breaking eggs. Well, we're going to break a hell of a lot of eggs because of how much debt we have. Why do we have so much debt? Because we had 20 years of artificially low interest rates, of punishing people who saved and rewarding people who borrowed. And so the whole economy is screwed up. We can't unscramble this egg. It's going to be bad. But I think that because it's going to be so bad, the Fed is going to choose what it perceives to be the lesser of the two evils. It will choose inflation over collapse, depression, financial crisis, bankruptcy. Just be in real assets, be out of the dollar, be in precious metals, be prepared to avoid the inflation tax because that's the tax that's going to clobber everybody.
What time period is this all going to play out over?
I've sounded the alarm in the past. We're pretty much run out of time. I mean, we're literally living on borrowed time. So any day, I just think any day you go to sleep, you could wake up and it could be a whole new world. And that's why you got to be prepared. During the debt ceiling debate, right? And we keep saying we got to raise the debt ceiling so we can keep borrowing. And if we can't keep borrowing, we're going to default, which is an admission that we're running a Ponzi scheme. And Bernie Madoff said, look, the US government's running the biggest Ponzi scheme ever. I mean, I'm a piker compared to the government, right? And so people would say, who cares what Bernie Madoff says, right? He doesn't have any credibility. He's a criminal. And what I used to say back then was, well, he's got credibility in one area, and that's Ponzi schemes. He knows one when he sees one. And if Bernie Madoff says the US government is running a Ponzi scheme, he ought to know. And then I used to joke and I said, instead of putting him in jail, we should make him Secretary of the Treasury because he would do a much better job of running the scheme because I pointed out that you had secretaries of the Treasury like current Janet Yellen. She comes out and says, hey, if we don't raise the debt ceiling, we're going to default. That's an admission it's a Ponzi scheme. Janet Yellen didn't say if we don't raise the debt ceiling, we're going to raise taxes so we can pay our bills. We're going to cut Social Security so we can pay our bills. No, if we don't raise the debt ceiling, we're going to stop paying our bills. That's why I would get a laugh. They say we have to raise the debt ceiling so America always pays its bills. No, we need to raise the debt ceiling to continue not paying our bills. The reason we have a stack of $32 trillion of unpaid bills is because we don't pay them. We go deeper into debt. I used to joke and I said, it's Ponzi 101. When you're running a Ponzi scheme, you keep it quiet. You don't tell the people that you're running a Ponzi scheme. So at least we could have bluffed and pretended that no matter what, we're going to pay. No, we told everybody that the only way America is going to pay its bills is if we can find some other sucker who will lend us the money. But at the minute we run out of suckers and we can't borrow, well, you're SOL. That's basically what they admitted. Yeah, I mean, it's a gigantic Ponzi scheme. And I think the Fed is going to try to prevent the government from defaulting by buying those bonds and printing the money. And that means the default takes the form of depreciation of the currency because the debt is unpayable. The one thing that you know for sure is the government's not going to pay its bills. It's not going to pay the debt. The only question is, how does it default? Does it do it honestly by just not paying or dishonestly through inflation? Default would be much better. I mean, I would like to see a complete restructuring of the government where the government cuts a lot of spending, including the debt. I think we should basically try to negotiate or maybe 50 cents on the dollar, 25 cents on the dollar. It's better to repay our creditors less money than pay them in full with inflated money where they end up with even bigger losses. But unfortunately, that's the path we're going to go down because from a political perspective, nobody wants to do the truth now. They just want to kick the can down the road. I mean, you don't want to defuse the bomb before it blows off. You want to let the bomb explode and then point the fingers and blame it on somebody else and say that there's nothing we could have done. No, nobody could have predicted this. If I'm right, then inflation is how this ends.